Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on October 31st. Happy Halloween to everybody. I was going to wear a costume. That's not really my thing. I hope you have a great Halloween and, of course, a great weekend. So October is usually a tricky month. In fact, it's known as sort of a bear killer month. If you're in a bear market, most bear markets end in October. Don't ask me why. That's just history. The one in 2022 did, for the major indexes anyway. But it's always sort of hectic, and we've sort of seen this year as well. Early in the month, we had the U.S.-China trade spat, big sell-off. Then we had a big bounce, but really only in the big cap indexes. Okay, no big deal. We've seen that before. The rest of the market was lagging. But then this week, we've seen some kind of legitimate things where, like the number of new lows, for instance, on the New York Stock Exchange, easy for me to say, 2 straight days of over 100. Today, as I record this, it's up to 90, so it looks like it could be 3 straight days, the highest since April. Okay, when we were crashing, even though the big cap indexes are hitting new highs. So very, very divergent. Okay, at the same time, the intermediate term trend is still technically positive. Some things are sideways, but the big cap index is positive. And more important to me, we've been talking about a lot of these stocks, especially growth stocks, that have really been doing nothing for 3, 4, 5 months, depending on what you're looking at. We have seen a lot of positive reactions and upside breakouts. We'll see how they go from here, but certainly so far so good. So what does it all mean? The divergence is something I wouldn't ignore, but I wouldn't put all your eggs in that either, because it is sort of secondary. It can go on for 6 months. It could resolve itself, or it could lead to, a big correction, or it could lead to a sharp rotation sort of thing. I like to think of it as a risk measure when things are out of gear like this, especially the longer it happens, and especially after we have had a big move in the market, obviously since April. I would just say risk is elevated, that we are going to get quote unquote real correction or some rotation or something like that. At the same time, like I said, there's a lot of stocks working, breaking out, reacting well to earnings. Obviously, the big cap indexes are still acting well, so you don't want to ignore that either, okay? So really, we've kind of are sticking with what got us here, which is, having some cash on the sideline, but taking your swings at things that look good, things that are breaking out, things that maybe broke out in early stage pullbacks to like some support, if that's what happens here in the next week or two. Take your swings at that. At the same time, don't be a pig. Take some partial profits on the way up. Have your stops in place. Raise your stops if things are going your way. Just sort of normal, proper portfolio management. I still think there's opportunities out there until proven otherwise, whether that means the indexes break, or maybe I'll do the video next week and all these breakouts this week all failed, and it's like, whoops, okay, that's a sign that the institutions are selling. But you got to go with what's in front of you. And so far, I'd say there's more positive evidence than negative, but there's definitely there's some gray clouds, appearing here. So you don't want to go out, at least have your umbrella with you, so to speak. Okay. In Cabot Growth Investors Model Portfolio, we've been rejiggering things. We sold some stocks, did some buying. We're still about 38% in cash. I'll be honest, there's a couple of stocks that I really like. I might be buying, but maybe we sell one and buy 2 or something like that. But, I think we want to rotate into, quote unquote, rotate into stronger and ideally fresher names that have been sitting around. Maybe they're starting runs that could go on. Maybe they don't go on for 6 months, but at least an intermediate term run. I'd like to rotate into those as opposed to some of the things that are lagging or obviously reacted poorly to earnings. Okay, so that's a long preamble. So let's hop into the charts. As usual, I'm using a program called Market Surge, product of Investors Business Daily. You can learn more at marketsurge.com. So it's as I got my notes here, just so I don't miss anything or forget anything. So here's the NASDAQ, which we always start with. I will just say this has nothing to do, it has something to do with what I just said, but it's just kind of something I wanted to mention. I will say after a very extended intermediate term run, prolonged, I guess I should say, not extended, and then you kind of get 2 or 3 gaps on the upside, and sentiment's pretty elevated here. I think Investors Intelligence Bears was the lowest since 2019, 2018, I think it was. That's, in my head, it is kind of like, again, I would just say, okay, we're not dealing with like the start of a move that everybody, is trying to get into. It's a little bit hot and heavy, as, you could probably tell just by looking at stocks. Nevertheless, as a trend follower, we're clearly in an uptrend with the NASDAQ, and clearly in an uptrend when you look at the S&P 500. Okay. I mean, hitting new highs, all-time highs is a good thing. I mean, up is good. New highs are, we used to say new highs are the most bullish thing a market can do, right? Hitting new highs. Okay. Even the Dow Industrials, you're looking at these. This is I don't focus on the Dow, but just even looking at this, again, pullback, nice surge to new highs. A little bit of hesitation here the last couple of days, so we'll see how that plays out. But new highs are new highs, okay? On the flip side, when you look at, this is small caps, okay? This is the S&P 600, a little bit below the 50-day line. I wouldn't call that decisive or some grand, huge, meaningful break or anything like that, but certainly lagging, number one, and number two, hasn't done anything since, mid-August it looks like. Mid caps, this is the S&P 400 mid cap. Again, I wouldn't call this a crazy decisive break of the 50-day line, but no progress for a while. The RSP, which is the equal weight S&P 500. I mean, again, almost the exact same chart, right? A little bit below the 50-day line, no progress since mid-August, and for that matter, not a hell of a lot of progress here since the start of July, okay? So and this is the big cap stocks, average big cap stock, not really doing too much. Even like the Momentum Fund, MTUM, certainly stronger above the 50-day line. It's been kind of grinding higher. But it, even in this case, I'd say since it popped here right after Labor Day, it really hasn't made any net, progress. So there's just a lot of, areas of the market. And of course, we've mentioned this before with XLI, not to keep repeating myself, XLF, financials, industrials, transports, stuff like that really aren't doing much. And I can't show it to you on Market Surge. I could flip to stockcharts.com, but just take my word for it. We're actually seeing some more new lows than new highs on some days, which isn't, again, it's not like a red flag, like, oh, when this happens 2 days in a row, the bulls are screwed or anything like that. It's not so much that, it's just telling you that obviously there's some selling pressure out there. And it's not like it's just one, it's not like, Mexico blew up or China blew up and there's a ton of Chinese stocks hitting new lows, but everything else is fine. It's kind of across the board here. So we'll see how it goes, okay? It's just something to be aware of, all right? The other thing I just wanted to mention here, just to watch, I wrote about this in Cabot Growth Investor this week, is just here's the 10-year note. It doesn't take a, chart genius to show 40, which means 4% basically on the 10-year note. That's been kind of key support here, generally speaking. Not that he can't dip below, and that's bounced off it again. I would think if we go below that, we'll see. Maybe we go below that and it's negative. The market's selling off. There's some, growth panic. But bigger picture, I would just say, a drop below, say, 4% on the 10-year, maybe 360 or 350 on the 5-year. I mean, these are fences that can be leaned upon, not exact numbers. But, if you get a legitimate breakdown, clearly there's been some support at those levels here all year when we have dipped in terms of rates. So if we get some more, falling through there for whatever reason, bigger picture, it's probably a positive, okay? Just a couple of things, or really one thing I just want to mention. So here, we have, we pick plenty of stocks that don't work out, so I'm not trying to make it sound like we're perfect at all. But, here's Celestica, CLS. We had this in top 10 earlier this month. We clicked it in here under 230, I think, or 235. And the stock just went up. And if you own some of these names, hopefully you do, which is a good thing. It's a good problem to have. But my thought is, given the risk factor, maybe Celestica is at 350 now. Maybe it goes to 550 in 2 months. I don't know. But why don't you bang out some profits? We happen to have taken, full profits in this because we were up 40% in less than a month, or 45%. At least in top 10 trader, but partial profits, or really tighten your stop for some of it, or however you want to go about it. There's no secret method to do it, but just something where it says, hey, in case the market is bubbly and we do actually have a real correction, which might hit these things 20-30%, and then maybe they stay down for a few weeks at least. You just don't want to look a gift horse in the mouth, so to speak. So I would just have some, be willing to take some profits off the table on the way up. I'm not saying go sell all your best stocks, but if you bought something 3 weeks ago, you got lucky, or not lucky, but you sat through earnings, the stock pops, it ramps up, you're up 40% in 3 weeks. Yeah, consider taking some partial profits into that, or full profits if you want, and then see how it goes from there. Okay, and even if you don't, even if you're not up 40, whatever, if you're up 10%, raise your stop. Make sure you're just kind of keeping more. And these days, people tend to. You want to focus more on buying or what's going on, and there's so much news and headlines going on. Usually it's best to not ignore that, but make sure you're spending enough time on your own portfolio. Hey, where's my stops? Why do I have 20% of my portfolio in this one stock? Something like that, where you're just kind of mindful of what you own, where you bought it, how big the position is, and what you're thinking of it going forward, in relation to the chart. Okay, they're all good problems to have, It's a lot better than a bunch of losers, but that's why you're doing it now, is to prevent that fact where you're going to have a bunch of things that you bought, you're up 30%, and then maybe you're only up 5% if we have a correction, okay? In terms of individual stocks, the good news, and again, I talked about new lows, I talked about the divergence, I talked about, I think this week, I think it was this Tuesday or Monday, the S&P, within the S&P 500 had the worst ever breadth day it's ever had on an up day. It was like 150 stocks were up and 350 were down, or 100 were up and 400 were down, or something like that. But the S&P still squeaked out a gain. So it's unusual times. The good news is, and I do admittedly key off this more, I'm staying flexible, but we are seeing a lot of growth names kind of that haven't done much start to flex. This is NVIDIA. Most people have heard of it, obviously, NVDA. I've talked about this before where it had this sort of reset base. I've probably talked about it, I think, the last couple of weeks. You had a bunch of weeks up in a row right out of the chute, which is usually a good sign of persistent. Usually the stock doesn't up and die at that point unless the market really gets in trouble. And then you just had, on the daily chart, I don't know, again, mid-August, right? This was kind of what was going on with all those small, mid-cap, the equal weight S&P 500. And now it's really emerged on the upside with some good volume. We'll see what happens. Again, you come back in next week, it's down here, not so good. But so far, it looks like kind of a fresh breakout, and it should be, quote unquote, earlier stage, given that we just had this big reset really over the prior year. Cloudflare, I've mentioned this before. I am recording this, like I said, late in the morning, so we'll see where things close. But overall, you just kind of had this period of no progress. Sometimes, by the way, not to go too far in a tangent, I know, a lot of people look at the absolute high and say, well, it's been basing out for a few weeks. But to me, unless the stock made a significant high, if it went way up here, that's different. But, net, Cloudflare really didn't do anything again since early August. You can see relative to the market, it didn't do anything, same time frame. And now it looks like it's breaking out here on earnings, on good volume. We'll see where it closes. Wayfair, mentioned this one in Growth Investor this week. Super persistent run here. Clearly a turnaround. This is not, total growth. And we had it in here, unfortunately. We missed it. I mean, we had it in here as a setup in top 10. If it broke out, and it never did, it didn't do it in time. So we just dropped it. But now, you're seeing the big follow through here. Or I shouldn't say follow through, but the big breakout on earnings. And it's handling itself well so far, despite some of the broad market things. Keep an eye on it. I think, just even if you never buy most of these breakouts, or don't want to buy them, keep them on a list, and that's what I do, and use them as a feedback mechanism. So like I said, if, NVIDIA and obviously NVIDIA and Wayfair are very different, stocks and quality, but if you have the NVIDIA and Wayfairs and Cloud, if they all kind of start coming in, or 8 out of 10 of them really come in and the breakout fails, that's probably telling you something too. But so far, you got to go with what's in front of you. So good. Teradyne, TER, kind of a cyclical chip person, maker, so to speak, but obviously it's been strong since the lows, but not really, what are you going to do with it? It's kind of, there's old resistance. It's been acting well. There's been other leaders that look good, but then it kind of went bananas on earnings this week, as it looks like next year is going to be a big, acceleration in the bottom line here. Obviously acting well since the report. Caterpillar, CAT, this isn't exactly, my cup of tea, but, it's been acting well here. It's just been an uptrend. Certainly could have shaken out if it wanted to after this recent run, but instead gaps up on earnings again, so far handling itself well. Cameco, this was not on earnings, so we'll see what happened. They still have earnings next week on the 5th, November 5th. It's crazy that it's already going to be November. But you can just see it tried to get going here, and it just could. You just have one of these things where it really couldn't get going. Every time it tried to get going, they were selling. Then they basically cut a deal with the government where they're going to buy a ton of nuclear reactors. MP, which we talked about way back, kind of had a similar deal. I mean, maybe Cameco has a good run like this, and it's cooled off. So, sometimes these government deals are good, sometimes they're not. We'll see what earnings. I'm sure earnings will have a big impact, because that's going to be more affecting the next couple quarters, as opposed to this government deal. I think will be more, a few quarters out at least. But either way, clearly a decisive breakout. And at least to this point, it's pulled back a little bit, but hanging in there quite well. I'm just going to mention Amazon. It's not my thing that I do. RP line isn't quite there yet. But anytime you see a mega cap stock really gap up on earnings, kind of out of above some resistance. You know, it looks pretty good here. This is Amazon on the long-term chart. You can see, or not the long-term, but weekly, you can see it's really been kind of building out a cup with handle, if that's your thing, with an attempted breakout today. Also on the big cap side, I wanted to mention Tesla. Not going to get into the whole, you know, if you don't want to own it, I'm just trying to bring good ideas to the table here. But the stock, again, has been in sort of this bigger consolidation since this is late last year, before the market tumbled this year. And then it kind of had this low level thingamabob and broke out. And now it's got this, you know, earnings are out of the way. They do have, like, I think they have monthly car production reports, whatever. But either way, you have this sort of, I don't want to say tight, but this reasonable little 4-week zone in here. So who knows, you know, if this thing can get going, obviously that would be another breakout for the market. Applied Digital, APLD, this is one of those hot HPC. I think I mentioned it last week, but we are seeing a few of these. You can look at it either way. You can say, well, you know, just to go here, you know, well, the QQQ corrected. This is the NASDAQ 100, excuse me. And then it kind of went up to new highs. And some of these corrected, like Applied Digital, and they haven't gone to new highs. So that's a negative divergence. It's possible. But it is kind of interesting that after going absolutely bananas, it's relatively well contained so far, and it is starting to quiet down. It would be very interesting to me if this thing did nothing for another week and a half. You know, if we're over here, right here, things are quiet, moving averages are catching up, market still looks healthy, that would be kind of interesting. But anyway, I find it interesting. TWLO, TWLO, you know, nice gap here. Again, this is one that had, you know, a big run late last year to new highs, corrected with the market, and then really never, you know, it had a run, but really never got going. And now after, you know, a few months, everyone forgot about it. See how tight that action is. It really just wasn't doing anything. Nobody's paying attention to it. Now it's gapping up on earnings. Today, as I record this, again, we'll see there's some resistance in there, but just another positive earnings gap from a relatively, you know, liquid tech name. ATI, this is sort of an aerospace materials play, I guess I would say, in that sense. But, you know, it got hit on earnings here. Really nice run after getting going from the market wipeout, but then got really whacked on earnings, and now it seems to be reemerging. Okay, not the best kind of overall pattern. This isn't my favorite thing right here, but certainly acting well here. We'll see what happens around round number resistance. Howmet, not the biggest earnings gap, but again, you kind of had one of these same general industry. You can see it's been a huge winner over time. So a little bit later stage base, not my favorite situation, but really didn't do that badly here, you know, just the last 2-3 months. It's just been consolidating tightly on the weekly chart, and now it's been kind of sneaking up, probing, you know, new highs, kind of came back down. Now it, you know, probed new highs, been volatile, but earnings are out of the way, seems to be accelerating higher. Some of these aerospace names look pretty good. ROKU, again, this is very volatile. You can already see as I record this, there's a little bit of selling showing up. So we'll see what happens. But at this point, trying to break out of this huge, you know, base. And then last but not least, believe it or not, we've seen some positive oil service. Like this is Valaris, which, you know, obviously is off its high. Almost everything, except for FTI, I guess, is way off its high in the oil space from a couple years ago. But kind of, again, kind of had this, you know, 2-3 months of no progress. You're going to see basically hasn't done anything and then reacts well to earnings. This is an offshore driller, all sorts. Sometimes it's deep water, shallow water, that sort of thing. Transocean, this is a lower price. It's a very liquid name. Excuse me, I got a frog in my throat. It's a very liquid name, but obviously it's a $4 stock. But I'm just flagging it because you're seeing some of these drillers, which tend to be pretty sensitive to business. You know what I mean? When things are good, they can be really good, or they can be death. And they've been death the last couple of years, and you're seeing a positive reaction on some of these things to earnings. I think Weatherford was another Yeah, I wouldn't say this was the biggest reaction, but you can just see, you know, kind of pushing to new recovery highs. So oil services, kind of an interesting cup of tea here. So my thing is just, let's see how it goes. You know, maybe this is a divergence. This is a top. I think the bigger picture odds is it's not a major top. You never know. There's no sure things in the market. Maybe it's a top and we correct and we shake people out, and the rest of the year we just kind of, you know, correct and consolidate, and, you know, we had our run. But I kind of have to see it to believe it, especially with all those stocks acting well, especially with the NASDAQ acting well, and especially with, and this is part and parcel with the broad market, but I mean, look at defensive stuff. I mean, this is the XLP is just getting taken apart. I mean, maybe it's so extreme. I don't know. You can always argue it's oversold or whatever, but to me, you kind of have to see it to believe it. So I wouldn't ignore the divergence. I wouldn't ignore the new lows. I wouldn't ignore some of these really, really extreme things we're seeing. Like I said, the S&P with the worst breadth ever on an up day. That's sort. I wouldn't ignore it, okay, but I wouldn't necessarily, take action on it. I would probably just be a little bit more discerning on the buy side. Make sure you got your plan in place of what you want to own and where you want to own it, or what breakouts you want to buy. Make sure your risk is in place. And for the things that you do own that are winning, don't be afraid to bang out a partial profit here or there, or at the very least, make sure you're ratcheting up your stop to take advantage of the good times as long as they last. Okay, that's all the time I have for today. Again, I hope you have a great Halloween and Halloween weekend. We'll be back again next week for another Cabot Weekly Review.